Vikas Khemani, President, Head Institutional Equities at Edelweiss Securities, joins us on the show right now. Vikas, good to have you this morning. Good morning to you. What's the call really on the market right now, given that we're talking 6,100?
So I think, thanks for having me. I think, markets have been sort of doing very well, backed by a few things. I think one is that global liquidity and global equity markets have been doing very well. Secondly, I think some of the local concerns, which were either around current account deficit or inflation, I think seems to be settling down right now. In between, we had a period of, huge amount of political uncertainty. At least that seems to be right now not on the forefront. So I think when you have a global benign liquidity environment, I think that is sort of, working very well for the markets. And secondly, I think if you see the earnings season so far has been by and large better than expected, or by and large good. So I think we have not had any disappointment on the earning. You had, broadly macro seems to be falling in place. Yes, political uncertainty, political risk is not away, it's not over. It can come up any time. But I think that probably right now sort of getting underplayed given the global liquidity environment or global markets at this point in time. So I would tend to think that probably right now some of the concerns which were at the top of the mind were I think are sort of on the back burner. And I guess if liquidity continues the way it is, if global market continues the way it is, I think we probably will see this trend for some time continuing. Having said that, we should not underestimate some of the challenges with us, either in form of political uncertainty. I mean, today is the Karnataka election results. We have to see. I mean, there's a possibility which might build up that if Congress does well in these sort of results, you might see. They might call out for an early poll. So I think we'll have to evaluate how the politics play out and all those things. And if the polls gets preponed, then probably market might still sort of again go into sideways zone. So I think we will have to see a lot of things how it develops. But I would say that markets are doing well, backed by the sort of global rally. And I guess the margin of safety from a valuation standpoint of view, from many other standpoint of view, have sort of reduced. So hence, one has to trade markets very carefully given the uncertainty ahead of us.
Because in any market at any given point in time, there are concerns and there are challenges. The whole, but if you have to balance risk versus opportunity, are you bullish or are you bearish?
See, again, Nikun, that really depends on the time frame you have, according to me. If you have, let us say, over 2-year kind of time frame, I have no doubt in my mind that, markets will do well, markets will deliver good returns. But I think given an event ahead of you, if you have a short time horizon, there are possibilities that markets might correct should the event not pan out that way. So broadly, things are looking all right, given the fact that, your interest rates are picked out, inflations are picked out, current account deficit is falling into place, commodities prices are coming down. So I think all those things are auguring very well as far as the economic factors are concerned for the markets. Political uncertainty is a very big event for us, and it has a very binary implication. So if you have an event which has very binary implication, predicting that and having implication of that is very difficult. So I mean, so hence I said that I think if you take a slightly longer term point of view, you can live with the short term downside. But if you have a shorter term 3 to 6 month kind of horizon, market will be very uncertain and volatile according to me. So I think one has to live with that volatility. Otherwise, I think macro broad level are falling into place.
What about sectoral plays, and especially the high beta or the more talked about cyclical names, even for that matter, infrastructure? Do you think they are coming back?
I think interest rate sensitives are definitely likely to do well, because we have had a couple of rate cuts, and I think some more might come through. And I think we feel that probably another 50 basis points is in offing over next in this financial year. So I think that will only help the interest rate sensitives, and I think we feel banking, automobile, real estate, I think interest rate sensitive sectors do well. As far as the infrastructure, which is also interest rate sensitive, is concerned, I think the policy overhang continues. So till the time we see, at the margin stocks might do well, but I think till the time we see sort of policy things getting resolved in each of them, and each of them have a peculiar situation, I don't think you will see a re-rating kind of situation coming through. They might do market returns or a little better than market returns, being the interest rate sensitive nature, but I don't think you will see a re-rating happening in those names in a hurry. So most people would like to play, I think, safer interest rate sensitive, such as banking sector, better names in real estate, automobiles, I think, and which is what you probably sort of see.
Because before we get into specifics of stocks and sectors, let's understand the market psychology. Benchmark indices are now striking distance away from an all-time high. But if I look at the market mood and the broader participation, it is reminding me of a bear market low. Do you think it is a matter of time the naysayers will turn buyers and the left-out syndrome will force others to come in?
I think, Nikunj, is a very interesting question you asked. I think most of the, I mean, if you see in the recent past, most of the money managers or investors have been struggling to make a call on the market, and markets have been behaving very erratically. I mean, a lot of events, unfortunately, has panned out very, very sort of against market expectation, either at the sectorally or at the sort of macro level. And I think that has made in recent past, money management or investments very, very difficult, because I think most money managers have quarterly earnings to take care and, outperformance to take care. And outperforming broader markets have been very, very difficult situation. That is the psychology, I think, ruling most of the, broadly the money managers at this point in time. And I think that psychology, and most of the people have not taken any significant bets in the market. So I think this rally in the recent past has caught, in my opinion, most of the sort of fund managers or investors sort of by surprise. I don't think many people were prepared to sort of capture this kind of move. And I think that psychology will definitely rule. Now, it clearly depends on, what lag this rally has. So if, let's say, this rally continues to remain like this and gets extended, you will see some point in time, I think, sort of panic button by some of those guys might be sort of being made. And I think that will kind of drive the markets maybe further. I think somebody in the show was making a point that, you might see this rally getting extended. And I think probably that psychology might sort of drive that kind of extended rally. One cannot say that. But I think if this rally gets extended, surely there would be a panic kind of situation, because most people's portfolios are not aligned right now towards this interest rate sensitive stocks moving or this kind of market participation at this point in time.
And do you think the rally will be more centered or led by large caps, or will it be broad-based?
I think so far, I think, it started with the, large cap led, and I think you've seen in the, last sort of 8-10 days broader participation coming, which is good. And typically that happens because it's not that, broader stocks are very cheap and, you've seen, results have been all right. But I think it's not that, things are really cheap despite all the, macro concerns. So I think, by force people would be, I think, going down, toward the second rank stocks, and which has also happened. So that has led to some amount of broader participation. So breadth of the market has increased in the recent past. So I'm not very sure that how long that can sustain. I'm not very broadly convinced based on only fundamentals how long this rally can last, given the fact that we have some significant macro events ahead of us. And also I think, results are improving, surely. Financial fundamentals are improving, macros are improving, but the pace of that improvement is not all that great to justify this kind of rally. So I think, if I were to balance concerns and, good things and bad things, I think the risk reward seems to be right now, after this rally seems to be sort of, getting again not in so much in the favor. But again, you need to take care in mind what kind of liquidity comes through. And if this rally, I mean, liquidity comes the way it is and global market continues the way it is doing, I think you might see a sort of panic button, as Nikunj was asking me earlier, that being pressed by some of the guys, some of the investors who are not positioned for this rally, because the underperformance in the market really kind of puts pressure on the money managers. And I think that can sort of trigger further sort of outperformance of the sector which are doing well currently.
Well, let's look at the star today, and it was the star yesterday as well. Mahindra and Mahindra Financials up 4%. It is moving up on very strong volumes. It is at 269 rupees. Good solid numbers, but numbers came out 3 weeks ago. Look at the 1 month graph of Mahindra and Mahindra Financial. It will be volatile, but in last 4 or 5 days, this stock has really gained some serious ground. The management has been maintaining that, look, return ratios are looking strong. We will continue to gain more market share, and there is no slowdown in rural demand. So that's the operating word there. The management is confident that for FY14 will be a better year than FY13. So Vikas, at the current juncture, how are you strategically allocating to maximize returns? Buying banks, some would argue, is a crowded trade. Defensives are expensive, and it's too early to buy industrials. What are the options left?
So, as I said, that everybody is facing this dilemma, Nikunj, and I think most people...
You're a smart guy. I know you've got some ideas. So
I'm sure, I do believe that all the money managers managing money in this country and outside are smart. So I think everybody is smart, and despite all the smartness, I think, people are struggling, because I think it has been very difficult to, take big call on the market at this point. I mean, has been in the recent past. But having said that, I feel that I think, given the fact that my conviction is broadly around, given the fact that macro sort of indicators are, I said, inflation is sort of peaked out, reducing commodity prices are coming down, interest rates are coming down. So I think broadly these set good sort of context for the sort of interest rate sensitive sectors and stocks. So I would still be comfortable putting sort of taking more bets on the banking sector, where I think fortunately, despite everybody's expectations so far, whatever results have come out in the banking sector, on the asset quality side we have not seen any disappointment. Margins have kind of done well. So at least on the private sector, I think post this quarterly numbers, confidence seems to have sort of risen, and I guess this will continue to do well at least till the time next quarterly number comes, and I think we'll have to again reevaluate that. It has become a quarter to quarter sort of story. So I think my confidence in the banking sector, wherever the quality of the earnings have been high, I think will be there, and I think investors will continue to put money. And in case like Mahindra & Mahindra Financial Services is a sort of reconfirmation of the fact that stock which has done well, result delivered well, I think markets have cheered that, and I think stocks have done very well post results. So I think similar kind of situation will continue to happen. Investors will put more money where companies are kind of delivering the returns. Having said that, one has to live with the macro event or one big political ahead of that. I don't think we can do anything about that right now. So I would say that banking, auto, real estate, some of the select infra names where uncertainties are lower, I think will continue to do well.
Because I know you have a busy day ahead. So final question. If you get a call from your client and the conversation is that because I'm convinced about the India story, I have a 3-year time frame, I can digest a 15% volatility, maybe a 15% downside, but I'm looking at absolute return ideas, stocks which could be 2x or 3x in the next 3 years. Identify a quick list for us.
So I think, in my opinion, I mean, in 3 years, 2x, 3x will largely, in my opinion, come out from the, sort of mid-market space. From large market space, I don't think we will see many multi-baggers sort of ideas. But I would say, rather than multi-baggers, I would keep my sort of ideas restricted to the, who can outperform well in the market. And I think Reliance Industries, we have said, and we have a sort of a Brevard series also, I think will do well in next 2 to 3 years time. I think stock has consolidated, looks sort of cheap, and I think margins have been improving. So I think that stock we believe will do very well. Media sector we like a lot, where I think Zee Telefilms have been doing well, and I think within that sector I think you will see stocks doing very, very well. Banking undoubtedly I think is a great sector where you will see returns coming out very well. I think ING Vaishya, ICICI Bank, I think these are the names which are, I think, sort of well poised, and I think they will definitely do well. I mean, ING Vaishya, according to me, is a stock which, can give you superior return because it's undervalued. Management have delivered quarter after quarter on all parameters. I think market is taking note of, those things. So it can get re-rated along with growth. So I think this stock can give a very, very good return. So in my opinion, these are the sectors you should look at.